Welcome to another S&P 500 analysis. Today is February 17, 2023. We got the CPI, the PPI, the retail sale. All these kind of economic report came out this week, and the market ended up almost unchanged for the week. Although we did see some wild swing on an intraday basis, at the end of the week, the S&P 500 closed almost unchanged on a week-to-week basis. So what could we expect for the coming week? Is this the calm before the storm? In this video, we're going to take a look at the market sentiment, the market internals, and also the price action of the indexes and the ETF, the SPY, and also the emini S&P 500 ES. In addition to that, we're also going to take a look at the US dollar, gold, the 10-year yield, silver, and the oil market, and see what they are telling us and what we could expect for the coming week. So stay tuned. All right, let's first take a look at how the index did for the week. And if we take a look at this watch list here, let's go and sort it by week to date. The strongest performer was the Russell 2000, followed by the Dow Jones Transportation and the NASDAQ Composite, and then the NASDAQ 100. Then Dow Jones Industrial lost 0.13%, followed by S&P 500 lost 0.28%, and the New York Stock Exchange Composite lost 0.44%. Then here on the month-to-date, the best performer so far month-to-date is the Dow Jones Transportation, followed by the NASDAQ 100, and then the NASDAQ Composite and the Russell 2000, and then the S&P 500 barely come up with a gain of 0.06%. And the Dow Jones Industrial is down 0.76%, and the New York Composite is down 1.22%. And for the year to date, the Dow Jones Transportation is the best performer, gaining 13%, while the NASDAQ 100, and followed by the NASDAQ 100 at 12.97%, NASDAQ Composite 12.62%, Russell 2000 10.5%, and the S&P 500 6.25%. New York Stock Exchange Composite 4.32%, and the Dow Jones is the worst performer at with a gain of just slightly above 2%. So that's the look of the percentage performance on a week to date, month to date, and year to date. And by the way, I did put out a video that you could go and get the link for this, the stat here, and put it on your watch list, and also put it on your chart if you wish. See the description below. I have the link in there. And looking at this weekly chart of the S&P 500, you can see that the range was 111 points, almost 112 points. It lost just about 11.25 of a point, and essentially that's 0.28%. Now it did print a spinning top type of a bearish candle, and also could see that it is coiling inside of this engulfing bar here, and holding above this declining moving average, and it is above this 10-week and the 40-week moving average, and also the 10-week crosses the 40-week. So it is still holding up above this trend line, and on this little bit of a near-term higher high, higher low type of a uptrend. Now looking at this sentiment chart here, as you can see, the VIX is just barely above the 20 level. So the market participant are still a little bit of a complacent, and it's not really fearful yet. But the put-call ratio is up at 0.9. I'm not sure is this thing really accurate right now because of the 0-day option, the daily OPEX. So I wouldn't put too much credence on these put-call ratio right now. The up-down volume ratio on Friday wasn't that impressive. It was only 1.7 on the downside, favor the down volume. And you can see that on Friday, it printed a little bit of a hammer doji type of candle with a gap down. And the advanced decline, the daily advanced decline, the decliners led the advancer by 402. And the new 52-week high outnumbered the new 52-week low by 52. Now here it could get interesting for next week. Keep an eye on that, because right now we're seeing a little bit of a positive divergence between the S&P 500 and the advanced decline, cumulative advanced decline. So there's two ways that this thing could get resolved. One is for the advanced decline to dip down and dip below this low here, or for the S&P 500 to come back up. So that's how it get resolved. So we'll keep an eye on it to see which direction the market decide to take. And here's the Nasdaq market. The Nasdaq 100 is also finished with a sort of a doji type of hammer candle, and the up-down volume ratio was minus 1.3. So that's in favor of the down volume, and 236 more advancer than decliners. And here in the Nasdaq market, there were 90 new 52-week high versus 76 new 52-week low. So the 52-week high outnumbered the 52-week low by a margin of 14. And in the Nasdaq market, we also are looking at a positive divergence between the advanced decline, cumulative advanced decline, and the Nasdaq 100. You see the Nasdaq 100 came down, but the advanced decline actually moved up. So again, we could see two possibilities for it to resolve itself. One is for the advanced decline to dip down. The other one is for the Nasdaq 100 index to move up. Now let's take a look at the indexes, starting with the S&P 500. On this daily chart of the S&P 500, you see that it finished on Friday with a doji hammer type of candle right near this 4079, close to 4080. So for the coming week, we want to see would it be able to come up and close its gap and move back above this 4106 area. And if it could get above this 4106, then we'd be looking for the S&P 500 possibly make a move up above the 4200 and get into this upper range of the expected move, which is between 4205 and 4192. Now, if it is unable to get above this balance area, and start get rejected and start coming back down, then we'd be watching this possibility of moving back toward the 4,000 level and into this lower range of the expected move between 3988 and 3960 for the coming week. And again, that is also in confluence with this trend line. So keep an eye on the 4,000 level on the downside for the coming week. And looking at the Nasdaq 100, we see the Nasdaq 100, the Friday's close is actually holding above this low here, and also holding outside of this balance area. So for the coming week, watch to see will the price continue to recover and close this gap and get back into this zone here above this 12,420. And if it does, then look for a move to come up to the weekly expected move upper range between 12,700 and 12,650. Now, if it is unable to come up and hold above this zone here, above this 12,420, and get rejected and pushed back down, and if it get back inside of this balance area, then look for the lower range of the expected move to get tagged, and that's between 12,066 and 11,975. And the Russell 2000 seems to be trapped inside of this little bit of a balance area. So for the coming week, we'll see will the Russell 2000 be able to get above this 1965 and possibly push above the 1980 and work itself up to this 2000. But if it is unable to get above this 1965, instead it come back down and dip below this 1905 and back into this balance area, then look for a retracement back toward this 1786. And here, looking at the Dow Jones Transportation, we see the Dow Jones Transportation is holding this zone here at 14,974. Now, beware that it could dip back down, then it will be forming a lower high, a lower low. And we could see that the Dow Jones Transportation could be working itself back down for this 14,133 area. But if it could get a bounce up here and pushes back and get back above this 15,400, then it could basically form a little bit of a W pattern. Then we could look for a retracement or a push up for this high here and get above this 15,800 level. And the Dow Jones Industrial, just like the Russell 2000, is being trapped inside of this area. So we'll need to see would it be able to get back above this 34,281 and break this little bit of a wedge here and break above it, then we could see it possibly work up toward this 34,800 area, 34,800 area. But if it is unable to break above this 34,281, instead, then we'll be watching for this thing to continue to dip down toward this 33,167 price zone here and see would it be able to find support and get a bounce. And the New York Stock Exchange Composite could be forming a little bit of a double top here if it breaks below this 15,800 and come down to this 15,600. So be aware of that because it is looking a little bit bearish unless it could come back up and take out this pivot high and work back toward the 16,200. So keep an eye on the New York Stock Exchange Composite because it has been showing some weakness here. Now looking at the SPY, the ETF for the SP 500, you see on Friday it closed inside of this balance area. So for the coming week, I'd be watching to see would it be able to get back above this balance area and get above this 409.72. So basically get above this 410 and possibly work up toward this upper range for next week, which would be between 415.30 and 414.40. So that's basically what I'd be watching for the coming week. And if it could get above this upper range, then there is a possibility that it could work toward this 419.96 or near the 420 level. Now, if it is unable to stay or get above this balance area and stuck in here inside this balance area, then I'd be looking for a move to come back down for this lower range of the expected move between 410 and 397.50, which is also in confluence with this trend line along with this composite point of control here near the 395.50. So keep an eye on this area. That would be a interesting area to see would it be able to get find some buyers here when it dips down here. And if it doesn't, then we could be looking at a move down beneath the 390 area and possibly come down to this 387.30. Looking at this market profile chart for the ES, as you can see on Friday, it came below the FOMC scene of the climb, the 4070 level, but wasn't able to close below it. It closed above it at 4086. So the market appeared to still value this 4073. In other words, it accepted that value, that level, and decided to close higher. Now, on Friday, it also took out this point of control from the February 10th, but still unable to come down and clean out some of these poor structure down in the from January. And here's what we end up with on Friday. We have a point of control here at 4068 and 3/4. Also finished with a poor high at 4090 and a half and a poor low at 4055 and 3/4. So we'll be watching to see would it first come up to clean out this poor low from Thursday and then come back down and clean off the poor high and possibly come down and do the poor low and keep an eye again on this 4073 because the way that I look at it, if the market have repriced what they think the Fed will do because of the latest job in the PPI, those stat and the CPI, then the market need to reprice what the FOMC did from the last meeting and have to price in what they might revise and have a higher rate increase and keep it much longer. Then I expect the market will dip below this FOMC seen on the climb to 4073 level and start accepting value below that level. Looking at this emini S&P 500 chart here, this daily chart on the ES, you can see the next week upper ranges between 42.15 and 42.01 and 3/4, and the lower range is between 39.96 and 3/4 and 39.65. So for the coming week, I'll be watching to see would it come up and fill this little gap here, essentially basically taking out this, repairing that poor low that we saw on the market profile chart from Thursday, then come back down and resolve, finish up resolving that poor high that we put in today and work itself down toward this lower range of the expected move, which is also in confluence with this composite point of control and also this trend line here. So there's a lot of confluence here. So be watching for this level near this 4010 area or 4000 area. Now, if the price could move back and get above this balance area and get back above this 4170, and then I'd be watching to see would it be able to work itself up into this upper range. Now, beware of this 4200 level. That's a psychological level. We might find we might find seller coming in at that 4200 level. So beware of that. If we do not find seller, then look for it to come up and tag this upper range and possibly move up toward this 4245 up at this this price zone here and see what we find seller. Because once we find seller and then we probably see it come back in to this balance area, then I expect the price to move down below, dip below and hold below that FOMC level of 4073, then work itself back toward this lower end of this balance area here, down here at this 3795. In summary, the market appeared to be on a holding pattern, so it seems like it is waiting to decide which direction to move. Now, I am paying attention to that 4200 level. The S&P 500 almost tagged a couple weeks ago, so watch for another attempt to try to get above that 4200 level. And if it doesn't, then we could see it might reverse back down and try to test the 4000 level. So keep an eye on those two levels, the 4200 and 4000 level in the coming week. So I hope you find this video to be useful and informative. And if you are new to this channel, be sure to subscribe and also smash the thumbs up to help me promote this video. Thank you for watching and stay safe.